Hi everyone, welcome to today's video. So over the last 1.5 months, the markets have started to recover quite aggressively. So a natural question comes that, hey, is now a good time to buy or are markets going to correct? So let me very quickly answer that question and then I will answer second critical question, that where is it that you could consider investing? I will talk about 7 or 8 very good stocks. So please stay tuned on this video. So let me first and foremost take you to the Nifty 50 chart and prove it to you technically why it is a good time to invest in the markets, or especially in the Indian markets. See, this is the resistance line and this resistance line comes out to be roughly 18,200 levels. Now test at what points this resistance has been tested. So 1 here, 2 here, 3 here, 4 here, one could argue that this is also there, 6, 7, 8, 9. So almost 8, 9 times this resistance line has been tested over and over again. Now, technically, there is a concept which says that, hey, if a resistance point has been tested multiple times, then it is very, very likely that it would be broken. So what does that mean? In simple terms, it means that there is a very good likelihood. Please notice the word likelihood. It's not a guarantee. कि घर पर बेच देंगे, and Akshat said that, okay, the markets are going to give a breakout, so tomorrow only it will give a breakout. No, nothing like this. The likelihood is that going forward, the markets are going to behave this way, that it might go up like this. It might fall, it might go up, it might fall, it might go up, it might fall, something like this. And this will be in an uptrend, right? So that is what I am pointing to. So therefore, I feel that markets overall are in a very good position technically from a long-term perspective. If you consider the long-term trend line, it is in a very good position to give a breakout. Now you can add this technical point to fundamentals. For example, ask yourself that recently US banks started collapsing. European banks, one of the biggest European banks, collapsed. Then Russia-Ukraine war had been going on for the last 1.5 years. So that has been going. On top of that, inflation, highest ever, it reached. Now inflation has started to cool off. So what exactly is the market waiting for in terms of its fall? So if you believe in that narrative that we are already in a bull run or we are close to a bull run, then you could consider investing. Please again notice the word that you could invest. It is your complete prerogative whether you want to invest, not invest. I am just sharing my viewpoint very, very openly from an educational viewpoint. Now there are two set of choices that you can make. One, you would say that, you know what, I want to buy direct stocks because that is where most money is made. So I will discuss this option. But in case you're not skilled in terms of individual stock picking, then you can definitely go the fund route. For this, you can check the NFO by Bajaj Allianz on Policy Bazaar. Bajaj Allianz Life is one of India's leading private life insurers, and it has come up with its first small cap equity fund in the Indian life insurance industry through a NFO, which is available for subscription from 10th May onwards. Just to let you know that if you would have invested rupees 100 in small cap fund in 2013, it would have become 464, almost 5 times by now. But this definitely comes with its own set of risk, because in small cap investing, the risk profile also goes up. But yes, when you are investing in the small cap, the returns or potential returns can also be high. For example, the BSE small cap index has given a CAGR of roughly 18.5% in the last 20 years. 5 of Bajaj Allianz funds have given more than 20% returns in 3 years. You can also avail tax benefits under 80C on the premiums paid, and maturity will be tax-free for annual premiums up to 2.5 lakhs. You can start investing in this NFO for as low as rupees 2,000 monthly. So do check out the links in the comment and description box. So now let me take you through 7 key stocks that I will talk about. This is not a buying or selling recommendation from my side. I feel that these stocks are relatively safe. I will talk about and comment about the pricing of these stocks as of now, whether they are at a discount or not at a discount, what is my position in these stocks. So I will reveal all these answers. So let us first and foremost take a look at HDFC Bank. Actually, I had been buying HDFC Bank since the level it was trading at roughly 1250, 1300. So I had been making a lot of community posts. I had been making videos that I'm buying HDFC Bank because it was almost given that, you know what, this is a good bank, this is going to recover. And over the last 5, 6, 7 months, and if you check the data here, it has given a very good run up. So it has given almost like 20% run up in the last 5, 6 months. So this zone, according to me, was a bulk buying zone for HDFC Bank. I had been making a lot of announcements in the member community tab also regarding the same. And even now, I am buying a lot of stuff. Am I buying HDFC Bank right now? The answer is no. Why am I not buying HDFC Bank right now? Because I have already completed building my position in that particular stock. Now you'll say that, okay, Akshat, the thing is that, hey, if you check here, it has given like 20% run up. Is it a good time to book profits and maybe move out of HDFC Bank? See, in the absolute short term, no one can say that, hey, this is like a great time to book profits. But yes, if you want to book a little bit of profit, then right now might be a decent opportunity. So this is one, but please don't sell your entire portfolio. Why is that the case? For that, please go back to the technicals. So there are 3-4 key things that you need to notice. First and foremost, if you consider this point, you will notice that the stock price was trading at roughly 1630, 1620 on 16th Feb 21. So 2 years, zero return on HDFC Bank as per the technical. So if you would have purchased HDFC Bank here, and if you're continuing to hold that position here, then you have made literally 0% return, right? This is point 1. Point 2 are very interesting patterns that are forming on HDFC Bank. What you will notice is that, hey, this is a wonderful long-term pattern. This is reverse head and shoulder that is getting formed. And if you pick the technical target, it comes out to be roughly 2100 for HDFC Bank. So if you want to aggregate position on HDFC Bank from a long-term position, even buying now makes sense, right? So from that perspective, it really comes down to your time horizon on this particular stock. So this is about technicals, and these are 2 central points that you need to remember. Was buying HDFC Bank 6 months ago a very good bet? Yes, I was yelling at top of my voice. I also put in a lot of my money. I had shown live investing all around it, and I had already built my position. Am I building more positions on HDFC Bank right now? The short answer is no, I'm not. Simply because of the fact that my positions are maxed out on HDFC Bank. I'm not going to take more risk and pour more money at these valuations. But if you're a long-term investor, then right now building more position on HDFC Bank makes sense. Technicals, fundamentals, both are pointing to the fact that HDFC Bank is likely to reach 2100 levels. How soon? Maybe like it will take 1 year. Maybe it can only take 6 months. No one knows that for a fact. Now you might have a natural question that if HDFC Bank is such a wonderful bank, why is it falling for the last 2-3 days? Well, because it is trading ex-dividend. Ex-dividend simply means that dividend declaration हो चुका है. मान लो कि on 21st May, dividend was declared. Now that stock is not going to give you dividend if you continue to hold it for a substantial period of time. So people usually sell stuff or people buy stuff just before the dividends are released. So stocks show a rally, especially something like HDFC Bank. And then once the dividends are declared, and if the valuations are already high, then people will just sell it. At least people who are buying these stocks purely for dividend. So that is the reason why HDFC Bank has been falling. Is there some fundamental issue going on with HDFC Bank? Absolutely not. In fact, go and check the fundamentals of the stock. What you will notice is that if you consider the revenues, it is sitting on its highest ever revenues, highest ever profits, and that is the reason why there is a very good probability that it is going to go to its all-time high. In fact, if you consider its all-time high, it was like 2 years ago, but consider the results for the last 2 years. Again, here also highest ever profit, highest ever revenues. It's a wonderful bank, excellent brand value. A lot of money is being pushed to banks right now. Now, why is that the case? Because you would have heard that FDs are going to give you exact same post-tax benefits compared to debt mutual funds. So a lot of money from debt mutual funds is now flowing to banks. And what type of banks? Tier 1 banks like HDFC Bank, where customers like you and I who might have discretionary income, we used to put our money in debt mutual fund. Ab debt mutual fund में exact same return आ रहा है for higher unit of risk. Why would you keep it there? So you will go and take out that money and put it in fixed deposit in HDFC Bank. If you want to understand this complex topic more, I will reveal it. I will give more of my commentary in the member community tab. I will also discuss my buying and selling decision. So you can check out more details about the member community in the description and comment box. So with that said, let me move to stock number 2, which I have been bullish about. And again, I have been posting my community on the member community tab, and the stock name is SBI Cards. I've been aggregating it and already I am on very good profits on this stock. Now, why am I bullish about SBI Cards? Well, so for that, let me take you through some data. First and foremost, check the industry growth rate. Now, credit card market is one such market which is growing at 20%. This is very, very high rate of growth for a particular industry. So the credit card industry or cards industry in general is growing at 20% CAGR in India. How else can you check this? Okay, so how many of you know of friends or relatives जिनकी तनख्वाह बहुत ज़्यादा नहीं होती, maybe like they are not sitting on very high income levels, but they will go and buy things on credit. This credit culture is picking up in India, and therefore it is almost given that this 20% industry data is not fake data. This is like very real data, and this trend is likely to continue in the future. So that's part A. Second thing that is going to increase the industry adoption is the linkage between UPI and cards. You would have read the news that you can link your cards to UPI. Now, what would that do? Well, it improves the adoption of the industry because everyone is well versed with how to use UPI. Uske saath saath, if you can link your card also, so it becomes easy to operate this entire ecosystem. So from that perspective, the usage of credit card, debit card is going to go up in India. Do I support it? That's a separate argument altogether. But from an industry analysis point of view, this is a goldmine industry and there are two leading players here. So here is a chart and you can clearly see that HDFC Bank and the second is SBI Cards. So SBI has a bank also and it has a listed company called as SBI Cards. So here I am talking about SBI Cards as an individual stock that you can pick. So these two are leading players and the difference is not that huge between number one and number two player. On top of this, what is happening is that when it comes to public sector banks, they are pushing their work culture. So on that note, let me know that these days when you go to SBI, how long is the lunch break? Okay, it's a joke, please don't take it seriously. But probably if the lunch break has shrunk, then it could be a great correlation to understand that the efficiency in public sector banks has been increasing. Okay, again a joke. But anyways, I hope you get the picture that even public sector banks are pushing really hard in terms of improving their performance. So the entire customer base of SBI, even a fraction of it, if it converts and takes the cards and start using it, very high probability that SBI Cards is going to become like a rocket business. Third, and the most interesting point about SBI Cards has to do with technicals. So let me take you through that. So what you would notice is that SBI Cards IPO came somewhere in April of 2020. That was a bad market or a little bit panicked market. Now it opened at roughly 700 rupees, right? And right now, after dancing around for so long, right, almost 3 years have passed, it went all the way up to 1150 rupees. Then it has come down and now it is trading at roughly 900 rupees. So it's not as if that from its IPO price, now you're getting it at a crazy rate. No major growth has happened and 3 years have passed. So this phase of 1-2 years after the IPO has been listed is called as the price discovery phase. Now during this phase, the market decides that what is the worth of your company. The market gives a verdict. So the market has given a verdict that the range in which SBI Cards need to move is this range, right? Please notice the word range. Now, what is the immediate profit here? Well, it is very simple. It is very likely that it is going to go to 1200 from this point, from almost like 850, 900 levels. There is how much gain? So there is almost like 30-35% gain even from this level. So this is a growing stock, has good base, has good price as of now. So I feel that this is a very good company that you could consider building your position in. Again, not a recommendation that you should buy, not buy. Please take my data points as an input for your further study. So one final point is regarding the investing trend right now. So what you will see is that even FIIs have increased their position and DIIs have also increased their position in this stock. So when will the stock start running? I don't know, but the stock is likely to run. Now again, not an investment advice or a push that you go and buy. Please consult your investment advisor. अब आप बोलोगे हाँ so पैसे नहीं है investment advisor के. So यार अब now I'm making a video. What can I do about it? I'm just giving you data points. Please pick and utilize it however you deem fit. And also pay the investment advisor in case you have. You can take their suggestion also and give the logics that I am picking and tell them, right? If they are saying no, so please show them this video. They will at least give a counter argument. So listen to their counter argument and then probably you can make an investment decision. Now here I will speak about life insurance companies in general. I have been bullish. I have already been building my positions in life insurance companies. HDFC Life has been my number one stock. Even SBI Life is a good stock, but I will give you a very quick comparison between the two. And accordingly, you can decide whichever stock, whether you want to build position, not build position. Okay, so let us very quickly understand the industry overview. If you consider the insurance industry, especially life insurance industry, it is driven by two factors. One is the factor around education, knowledge कि आपको life insurance खरीदना चाहिए, should you buy it, should you not buy it. So that knowledge is picking up. What has been the trigger? COVID has been the trigger. The second trigger is the increase in discretionary income. Now data tells us that discretionary income is growing in India. So I will agree with that. There are a lot of counter arguments that can be made, probably another video altogether, but let's work with the assumption that even discretionary income is not going. So because we are investing, we think in contrarian way. Let's assume that even discretionary income is not like going up massively, right? Salary increase is not happening at the rate at which inflation is going up. So discretionary income is not growing like crazy. So even if you assume it, the thing is that when people's discretionary income does not grow massively, they only spend on critical items, healthcare and life insurance are critical items. Especially these days, the trend in the urban communities is people who buy life insurance, health insurances, that mostly, and I'm not saying it from a sexist viewpoint, I'm just telling you the reality, that a lot of women workforce from India are quitting jobs, are looking after households, right? So this is what the data tells us. So what does this lead to? Well, if you have just one breadwinner in the family, and if something happens to him or her, then what would happen to the household? The household will have to go through a lot of hardships. So therefore, people consider life insurance as a very necessary, critical product right now. The thing about life insurance in India or even health insurance in India is that the penetration rate is really, really low. So from that perspective, this is a critical product. Discretionary income is growing, and even if it is not growing, money will be spent on critical goods. So from that perspective, there is a very, very high likelihood that the insurance or life insurance business especially is going to go rocket again, right? Now comes the natural question that, you know what, HDFC should we buy, or should we buy LIC? So here is some important data that you need to know. We assume that life insurance companies only make money by selling life insurance. No, they have a bunch of products with them that they sell. These could be investment products also. These could be insurance products also. So there are a series of products. Now, when it comes to HDFC Life, their product portfolio is very balanced. For example, take a look at this. This is the revenue stream as to how HDFC Life makes money. And you will see that, you know, the split is sensible. When it comes to SBI Life, you will see that the split is unbalanced in a way. So between these two companies, HDFC Life and LIC Life Insurance, which one is a better fundamentally stock? According to me, HDFC Life. However, a counter argument can be made that, you know what, SBI have a slightly better brand perception compared to HDFC. Now, a lot of people will say, oh, ye kya bol diya? HDFC does not have a brand value. No, it has a massive brand value. But think about it from a customer reach point, right? We are talking about urban customers. Yes, HDFC probably has a better value. But when we are talking about the masses, so people have a lot of faith on government-backed entities, भले वो bankrupt हो जाए, right? But the point is that people have a lot of faith on government entities. So from that brand value perspective, SBI is more solid, right? So yeah, take a look at that, and this is a good investment opportunity. Now let me speak about point number 4, which is HDFC AMC. I've spoken about this stock multiple times. A lot of heat has been generated. Last 1.5 to 2 years has been bad for me personally when it comes to HDFC AMC. I honestly did not think that HDFC AMC is going to correct so much, but unfortunately it did, because there was mass market panic and the market stayed sideways for a fairly long period of time. Now, how does the fundamental equation changes here? Let me give you a very quick snippet. See, first and foremost, the business for HDFC AMC is coming back up, right? So it's not as if that the business has gotten crushed or they are not able to generate sales. They are able to sell stuff. This is one. Second is that their OPM is going up. What is OPM? It's operating profit margin. Now, why is OPM going up? Well, because a lot of AMC companies these days, they have changed the nature of the product that they were offering. Now the focus is on volume. So they are launching new products, getting more people to invest in. And as some funds mature, they become more profitable. Now, what am I talking about? Well, think about it this way, that hypothetically speaking, that if I launch my fund, right, in year 1, I'll get few investors, right? So my OPM or operating profit margin will be low, right? Because let's say I'm getting 100 customers, then I'm managing their money. I'm probably having an OPM of 5-7%. Now in the first year, if the fund does well, or second year it does well, third year it does well, then what will happen? Ki market mein hawa ho jayegi ki, you know what, very good fund, go and invest. So from that perspective, I'll get a lot more customers. So from that angle, my OPM is going to go up. So that happens from a product segment viewpoint for different AMC or asset management companies. Very quickly explaining you the model here, that what AMC companies typically do. So they do this. So consider, for example, HDFC AMC, they will have a bunch of funds. For example, they will have a debt fund, they will have a hybrid fund, they will have a small cap fund, large cap fund, this fund, that fund, right? And every fund will be getting some amount of rupees. So a lot of money will be invested in all these funds, right? Now, as these funds start to get mature, they grow in size, right? They start growing in size, and the AUM goes up. Now, AUM goes up. How also? Well, it goes up when the stock price increases. For example, consider any equity fund. Now, if the market or Nifty is at 15,000 levels, then it goes to 18,500 levels. Now, here itself, there has been like almost a 25% growth in AUM. And how would HDFC AMC make money? Well, they work on commissions, right? And commissions on what? Commissions on AUM. So therefore, I feel that HDFC AMC even now is at a good position where you could consider building some positions. AMC business is is not a dead business. It's not as if that it will go to dust and something bad will happen. AMC business have cycles. It is currently going through a bad cycle, but very, very strong likelihood that going forward, there will be an up move. And whenever the next bull run sort of happens at its prime, AMC businesses are going to shine. So the next stock that we are going to consider is Page Industries. If you consider this stock, what you will notice is that currently it is trading roughly 21% from its peak. In fact, I started aggregating this stock and again made the announcements in the community member section. I started aggregating this stock somewhere here, right? So I was lucky that I was able to time the temporary bottom of this stock. So I built a lot of positions here. Now, the thing is that even now it follows this long-term trend. So if you draw the support and resistance line, what you will notice is that this channel is actually getting followed even now. There is a very high likelihood that it will touch this point. It will go something like this. It will correct a little bit and it will come back up. But the point is that the long-term trend is upward trending for this stock. If you have 2 to 3 year horizon period, very good chance that you're going to make very good money. That's part A. Part B is that if we are anticipating a bull run in the short run, a good bull run in the short run, then something like Page Industry is going to go up massively from this point. Why? Because it will reach its previous peak, which comes out to be somewhere here very, very quickly. So there is a 25% gain to be made. So what am I exactly pointing out to? Well, it's very simple that there is a good chance that a bull run is going to come in the short run. In that case, something like Page Industry is going to give a very quick up move of 25-30%. I'll explain the reasons also for that. And third and finally, even if the bull run does not happen, the market trades sideways. Even then also, if you're having a 1.5, 2 year viewpoint to this entire spectrum, what is going to happen is that you are still going to make money on Page Industries. Now, why am I saying it? Well, there are two reasons. First key reason is that if you consider the sales figure, it is again sitting on its highest ever profits, highest ever sales, and not the highest ever stock price, right? In fact, the stock price has been fairly low. So this is one, that the fundamentals of the stocks are very, very sound. But more importantly, you need to understand what is happening. Well, the company is able to successfully increase its revenues, and also the company will now be able to successfully reduce its cost. So how are these two things happening? First, let's talk about the revenue bit. So take a look at this article. First, it says that Jockey or Page Industries is going to increase its product prices even next year. It has already done once. So what does that show? It shows that the company has pricing power. So its revenues are going up already, and going forward, very good chance that the revenues are going to go up further. That's one. On the cost side, what is happening is that, see, what is the primary raw material in terms of making fabric? Well, it's cotton. Why did the Page Industry stock fall? Because of the fact that there was a lot of cost pressure because of increased inflation in the world. But now if you check the cotton prices in the world, this is the range in which it typically moves in real term basis. So it spiked aggressively. It almost went double from this point, and now it has started to come back. So very good chance that it will again attain that same level, and therefore Jockey will have an easier time cutting cost. So what will happen? The profit margins are going to go up. If you consider the next 2 quarter results, very good results are going to come, and something like Page Industry again will become a rocket. Probably it will not give you like 60-70% return, but at least 30-35% return can be expected in the next 2 years, and therefore I consider it to be a slightly more safer bet. Okay, so the next stock on this list is Asian Paints. I have been extremely bullish about Asian Paints. When it fell, again built huge positions, again made all the announcements on the member community tab. If you have been watching my YouTube videos also, you would know that I have been a very big investor in Asian Paints over the last several months, because it was a very, very sensible bet, very easy bet to make money. And why is that the case? For that, let me take you to technicals. So this is what I had said, right? That, hey, I'm building like a lot of positions here. I was able to successfully build positions here. These stocks started moving up, and I gave a target that it will go up by 30% from this point, right? And it is very well underway. This entire graph shows you that. So how much of this gain has been completed? So roughly 13-14% gains have already been completed. So these are the profits that I'm sitting on already on Asian Paints. I still feel that irrespective of the market conditions, there is a very good chance that Asian Paints is going to go up by another 15%. Now, why am I saying this? So for that, please go and check the recent results of Asian Paints. You'll quickly figure out that Asian Paints has done phenomenally well. In fact, people were not expecting it to do that well, but it was able to do really, really well. Still, there are skeptics in the market. They are saying that, you know what, Grasim is entering and new paint companies are entering. It's a highly lucrative industry. Therefore, Asian Paints will face a lot of competition. Agree. But have you checked that how much money Grasim is going to put and when their capacity is going to get built? So these are the outlines and these are the timelines. So they themselves are saying that, see, we are going to put money, but it will take us like 3 years to make those investments. So even if we believe that somehow Grasim is going to become like hyper competitive with Asian Paints and take away market share, when will that story start? Well, it will start happening probably like 1.5 to 2 years from now. So why are you so much worried about it as of now? At least capture these gains. This is my simple point. Again, not a push that go buy this, no do buy this. I'm just explaining you the logic. Please go and pay registered investment advisors, show them this video, ask them logic. You yourself will get better information. That is my simple push, right? So from that perspective, you can understand all the arguments and accordingly make bets. Now, unfortunately, this video has become really long, so I will have to cut short. I cannot discuss the last option that I was going to discuss, which was around TCS versus IT index. So probably I will write some commentary tomorrow on member community tab. But I hope you enjoyed this video. If you did, do press the like button and I will see you very soon.